This is the end of quite a remarkable week on Wall Street. Let me try to make sense of it. First of all, most important was the action here in the bond market. You saw quite remarkable spikes downwards in yields, twice going below 2% on the 10-year. Even though that was partially reversed, that really cannot be ignored. Something must be amiss if the bond market can behave like that. Next, take a look at the stock market. You can see that again there was a big sell-off in the S&P, particularly following that very dramatic downward spike in bond yields. But I would suggest the most important thing to point out is that that reaction is really remarkably muted. By the end of the week, the S&P was only down 1%. It was never a full 10% down from its peak, which is generally regarded as a correction. Given the remarkable goings on in the bond market, that was really quite remarkably calm. Finally, when it comes to oil, which in many ways triggered this, oil prices are down again this week. Brent crude is down some 25% from its peak back in June. That is again quite a startling development. Now, what is likely going forward? First of all, plainly, I think this should be regarded as a very important warning sign that something is coming up. We had volatility spikes like this ahead of the credit crisis in 2007 and also ahead of the bursting of the dot-com bubble in the late 90s. Something like this happens for a reason. Secondly, the equity market, it has to be emphasized, has not meaningfully corrected. There's been a remarkable absence of panic selling. There's been a remarkable unanimity among strategists that it's time to buy on the dips. There is plenty of ways in which the stock market can carry on far after it should have done. Again, going back to 2007, the subprime crisis broke very early that year. The stock market went on to form a very big peak only late that year in October. Finally, I'd like to suggest looking at this graph, which compares the performance of the US stock market with other developed markets since the rally began in 2009. It shows a quite remarkable outperformance by the US, and I'd like to suggest we all think about what that really implies. It suggests that the rest of the developed world is going to go completely into the doldrums, but that the US is going to be fine. Is that really reasonable? And in further, if the US does pull through, isn't that really going to help the rest of the world more? If the Eurozone lapses into crisis, doesn't that really imply that the US is due quite a big fall? I'd like to suggest that that dynamic where the US continues to outperform the rest of the world to a remarkable extent is something to keep an eye on, and that's the note for quite a wild and weary week on Wall Street.